positive about this being recorded is, of course, that if you want to revisit any of the details discussed here today, that is not a problem. I also wanted to tell you that there might be issues discussed today that are related specifically to some of the legality issues, perhaps, or the democratic shortcomings. If you have more questions about that, there is another event which is available at the Bellona website. But welcome everyone to this second event in the Bellona Europa event series on the taxonomy. And we are arranging this with multiple different stakeholders and cooperative partners across this field. And today we are very happy to be co-organizing this event with Climate Bonds Initiative, who is represented today here by Sean Kidney, and whose colleague Anna Maria Syriaki has also been a tremendous help in this process. So thank you very much. We are working here to try to go further into the details of the different aspects of why the taxonomy CDA is problematic. And I will not go into details here because I think that's exactly what the speakers here will be doing today. So I think we should kick it off. Today's event are focusing on the implication on financial markets and the role of fossil gas in the EU green transition. And we will start with some remarks by MEP Philip Lamberts. And while Philip is speaking, we will be turning off our cameras, the rest of us, the speakers. So Philip, the floor is yours.
Thank you. Good morning, everyone. So why do we have a taxonomy at all? Well, because there's been so much greenwashing in the financial industry that it was about time that we would have at least an official label qualifying, detailing what qualifies as a green investment. So the basic idea has been around for quite a while. Interestingly, initially it was resisted with all full strength by the financial industry, because of course the financial industry has a vested interest in selling stuff as green that may not be that green. And just as an aside, it's interesting that people who claim to be market liberals actually do not want every market player to have full information about the reality of the products being sold on the market. Whereas, as you know, efficient market theory has it that all players have to have full information to make rational decisions. But of course, if you want to tweak the market your way, then you have a vested interest in having customers not knowing exactly what they buy. Now, the Commission came out with this taxonomy project, which is a first attempt, which already in itself is not perfect. In other terms, there's many areas where there's tweaking at the edges with what is green and not green, but at least the basic legislation gives us a foundation to build upon. And here comes the first delegated act. When was it? It was late last year. No, I mean early last year, which indeed tackled the energy aspect of taxonomy, and which was quite good in the sense that, well, those two suspects called gas and nuclear were out. Now, it's telling that the Commission came out with that delegated act because it stated the basic intention of the Commission that it was no gas and nuclear. Because indeed, if the will of the European Commission had been to bend to unfriendly pressures from the gas lobby and the nuclear lobby, they would have done it at once. But they didn't want to do that. So they wanted to play a waiting game, and well, they hoped that the pressure would abate. It was not the case. It was not the case. And first and foremost, it's Emmanuel Macron of France who pressured the Commission and threatened the Commission in no uncertain terms that nuclear had to be in. And of course, that opened the door to the other lobby, the gas lobby, to be included in a complementary delegated act, a second one that actually has no reason to exist, because with the first delegated act, the legislation is fully operational. We never needed a second one in the first place, yet it came, as you know, at New Year's Eve, the text was released, including a lot of gas and a lot of nuclear. And I know that the European Commission will say it's not a lot of gas and a lot of nuclear, but basically here we are. And we are nearing the time where, well, the co-legislators must decide whether they let it pass or not. And the battle that we are fighting in the European Parliament is to block it. So we need to find an absolute majority of members of the European Parliament, of members, not voting members, to block this delegated act. Now, why are we doing that? Well, because we want a label that is reliable. And again, I would argue, as a market liberal, I want market information to be reliable. And if indeed we are allowing stuff on the market that is financial products, including gas and nuclear, to be portrayed as greens, we are actually distorting the market. And market players will no longer be able to make choices in full knowledge of what they are doing, because some financial products being taxonomy compliant may have no gas and no nuclear, and some others might have gas and nuclear. And of course, the European Commission is saying that, yes, we are going to make sure that taxonomy compliant products that include gas and nuclear will need to have full disclosure about that. But that is yet another piece of legislation that should be modified. And until it is, well, basically you can sell financial products funding gas and nuclear infrastructure as green. And this we don't want. Now, the big problem that I see in the battle is that and you can hear that from the financial market as well as from the industry, they portray the taxonomy as a sort of go, no-go instrument that would basically make funding nuclear and gas infrastructure impossible if it weren't included in the taxonomy. That's really interesting, because initially they discounted taxonomy as basically a useless tool, and now basically what they say is that taxonomy will make investment in non-taxonomy compliant stuff just impossible. So as if taxonomy has such power to prevent investment in non-green stuff, which is of course not true. I often use the metaphor of the supermarket, where you can buy organic food, but you can still buy non-organic food. I mean, you have both in the supermarket. The only thing, if you transpose that to financial markets, is that indeed there might be a price premium to be paid if you sell non-taxonomy compliant products. And this is what they don't want. Actually, this is again another example of the fossil industry wanting subsidies. Basically, they don't want their stuff to be paid at a real market price that is factoring in the negative externalities, factoring in the risks of stranded assets that these assets present. So they basically want to be, the market to be distorted in their favor. And this is something we absolutely don't want. What is green must be green. That does not mean that EDF in France would not be able to fund nuclear projects, but then they have to fund it at market prices. And of course, you will say, yeah, but you know, it's going to be the French state paying for this nuclear infrastructure. But then again, the French state will need to find funding on the markets. And of course, the EDF debt is already so high, and they are absolutely not out of the woods. Of course, they would hope that being taxonomy compliant would help them a bit on the financial markets. I doubt it, because the nuclear equation is so toxic that I doubt that a penny of private money would flow into nuclear investments. But yet again, it's a matter of belief. On gas, it's a bit different, because indeed, one might think that indeed, if gas investments have to be funded at market prices, including the premium of that you would need to pay to mitigate the risk of stranded assets and the like, it may make indeed the calculus of gas investments less favorable. But that's what we want. That's what Europe has wanted all along. basically to use market dynamics to foster the fight against climate change. And this is now when push comes to shove, apparently people get cold feet. They don't want this to happen. So basically, again, we're not saying that money should be forbidden to flow into gas and nuclear projects. The only thing we want is that those financial products not to be called green, because they are not. They are not. I mean, again, another metaphor: when smokers go to less aggressive nicotine products to get off the nicotine hook, these substitute products are not called healthy products. They are just products that allow you to phase out your nicotine addiction, but they are still not to be advised to healthy people. And this is what we want indeed. The International Energy Agency says that from now on, zero funds should go to fossil infrastructure. And we tend to agree with that. But then again, if people want to do that, then they will need to pay the premium. Another, and that will be the end of my initial remarks, we have a serious legal issue with inclusion of nuclear and gas, because if you know a bit about EU legislation, I mean, delegated acts is legislation that makes basic legislation, in this case, regulation, operational. It basically writes down the details. What you cannot do with a delegated act is deviate from the intention of the basic legislation. So you have to make it more precise, but you cannot say the contrary. And we would argue that both on nuclear, and that is the do no significant harm principle, which is anchored in the legislation and which is not met by nuclear, and the emission norm for gas that is included in the legislation, well, in this case, the delegated act significantly deviates in terms of requirements for gas investments to qualify. So we say that not only we have a fundamental political problem because the delegated act in some way deviates from the does not fulfill the goal of having a robust green label for investments, but also legally speaking, it is doing stuff that is actually not allowed by the legislation. So for those reasons, we are fighting tooth and nail against it. Now, my sense is that the European Commission did not really want this, but also they did not want to get cross with the likes of Emmanuel Macron. And I think that this is not a good guide for legislation. Our understanding is that the same Emmanuel Macron, for all his green statements, even threatened to derail the Fit for 55 package if he didn't get his way. Well, I have not been a direct witness of those threats, but I think that they are indeed credible. And I do believe that operating under threat of any head of state and government is not a good guide for policy for either the European Commission when it proposes legislation or for the co-legislators to adopt legislation. Thank you.
Thank you very much, Philip. And I'm looking forward to the opportunity to talk about this in more detail later on. I will now give the floor to Sean, who I also understand CBI has actually launched a paper today, which you will also explain here to us. So with that, take it away, Sean.
Thank you so much, Lena. Thank you, Philippe, for those great comments. In the chat, I've published, I hope people can see it, the link to the paper we've just published for this webinar on accelerating the fossil gas transition. I'll have slightly different comments. You know, I want to stress that we have an extraordinary challenge ahead of us in Europe and the world around climate. And of course, the purpose of the climate change taxonomy, it is a climate-focused taxonomy at the Commission's laudable positive request, is to identify what are the right investments to make to address climate change, and of course, by implications, the wrong investments if you're not on that list. That's not just energy, it's transport, it's buildings, it's a whole range of industrial and economic and sectors in society. We have a pretty significant problem on climate change. For those of you that have seen the Intergovernmental Panel on Climate Change report of a few short weeks ago, you will realize that we have a terrifying prognosis. If we don't get global emissions down 50% by 2030, we essentially can sign ourselves to a future of catastrophic climate change. And bear in mind, we have climate change already. We've lost that fight. We are going to see a century of increasingly warm temperatures and a whole range of impacts as a result. And remember that when we experience climate change, based on what happened in the past history, notably the 1600s, where Europe and the world experienced 2 degrees cooling. Long story why, man-made again, but the point is, when we experience climate change, we don't experience it as gently rising sea levels and increased severity of storms, albeit these things can be pretty impactful, as we've seen in Europe in the last year. We actually experience this generally as wars, famines, and pandemics. The pandemic we've just gone through is rooted in the collapse of biodiversity in China and in Southeast Asia, directly linked to human impact on the ecosystem and to climate change, restricting biodiversity, reducing access to natural capital for bats who've had to combine into single colonies and pathogens jumping between species, etc. The war currently underway on our borders with Russia invading the Ukraine needs to be understood as a petrostate war. This is an autocrat of a petrostate who has been using artificially generated revenues, largely from Europe, to invade a neighbour. The International Energy Agency said very clearly a couple of months ago that Russia was engineering the price increases that European consumers experienced late last year, which dramatically increased the revenues that Russia got from gas and oil. And those excess revenues, above and beyond what they were already getting, have been more than enough to pay for the entire war. And I mean, I'm putting aside the horrific loss of life on the Russian side, let alone the Ukrainian side, all of those poor young 19-year-olds who don't know what's going on sent to war. It's a petrostate war, folks, and we're going to see more of it. And of course, on the back of that, the collapse of food prices, the collapse of exports out of the Ukraine being blockaded still, and Russia because of sanctions, we now see the prospect of famine in many poorer countries around the world who can no longer afford the food imports because the price has gone up so high as a result of scarcity. These are the ways we experience climate change. We're going through it. If we don't get our emissions down fast enough, all of this becomes worse. It's very clear from the International Energy Agency's net zero report of last year, there can be no new fossil gas if we're to meet our 1.5 degree goals. It just is not possible. You can't make the numbers add up. So the lunacy of this particular CDA, where the Commission, and I think Philip's right, to a certain degree has been forced to present a political compromise of sorts, which allows the building of new gas on the promise, on the hope, on the wish that in 15 years it'll be able to find low carbon gases, but you don't have to do anything for certain. No contract signed, no dividend, just a promise at a time we can no longer afford promises anymore, is madness. Now, for the last 30 years, we've been talking about climate change at UN climate conferences. And we have been essentially saying, oh my God, scientists, that is so bad, it's terrible. But what about we just do this, because it looks really hard. We'll just do this. And that's what national climate change plans have been. They've been politically mediated, politically compromised strategies to address climate, which have led us to failure. have led us to 30 years of increased emissions when we were supposed to be reducing emissions. Last year, they went up 6%. This is a total failure. Of course, Europe has done better than other economies, but not well enough. We know this. This is why Europe committed 2 years ago to drastic reductions, 55% by 2030, now totally compromised by this particular CDA. It's why Europe has tried to play a leadership role in promoting and supporting other countries to be able to significantly increase their ambition. This compromises that leadership. You know, when the CDA was announced, there was a headline in the newspapers of Maputo in Mozambique that has a huge potential gas field being developed, compromised by Islamic rebels, but nevertheless. The headline was, Europe says gas is green. We legitimised the very industry we need to be downscaling. The very industry that has led us to this war in Ukraine, the very industry that has continued to give us false information about the emissions footprint of gas. We now know, for example, that across the life cycle, the pipeline, because gas has to be piped or transported from base to the wellhead, there's leakage factors. Gas is 80 times as potent as CO2 when released into the atmosphere. A tiny bit of leakage, just sneaking out those little holes, throws out all our figures about the benefits of gas. 3 to 3.5% leakage, and you've got a gas plant that is effectively as bad, or if not worse, than a coal plant. That's the nature of what we're now uncovering. There are fantastic satellite photos by a company in France called Kairos, which shows you exactly where this is happening. And big surprise, across Russia, across Central Asia, across the Permian Basin in Texas, there are enormous levels of methane leakage, which we have not been calculating when we try and figure out that gas is a transition fuel. It's not. It's very clear now. It's not, at least until we absolutely sort out all of those figures, all those leakages that are happening around the world. And even then, according to the International Energy Agency, it still doesn't stack up. So this is a form of lunacy. With one hand, we say we need to reduce our emissions. We say we need to reduce our gas dependency on Russia. And on the other hand, we say, oh, but building new gas plants, that's fine. We can call that sustainable out of this proposal. It's just crazy. Now, the mad thing about this is that while we wrestle with these challenges of necessary ambition, of credibility of Europe on the global stage, and of the need to change our economic dependence on the aggressor nation to our east, we've proven that investors will invest, despite Philippe's concerns about greenwashing in the sector. We know that when we produce investments, green bonds, for example, which are consistent with our climate ambition, which is what we've been able to do so far, investors are moving to them in droves. The oversubscription rates for the European Commission's green bond, for example, which does not include gas, according to DG budget, and will not include gas or nuclear. It's incredible, 10 times oversubscribed, way higher than any other kind of bond. The UK government, the Dutch government, many corporates in Europe are finding that if they create investments that are consistent with climate ambition, they get extraordinary levels of support from the investment community. And the investors I speak to, and look at the statements from the Institutional Investor Group on Climate Change, which represents some $50 trillion of investors in Europe, I think. I can't remember the exact figure, but it's bigger than the European economy. They've said very clearly that gas and nuclear, as represented in the CDA, cannot be classed as necessary investments in climate, and they won't be investing in it. I actually think this is going to be a problematic thing, because while we sacrifice credibility on one hand, I don't think it'll lead to more capital floating in going in those directions. The investor community is speaking quite loudly about it. So really, it's an own goal. We are kicking an own goal in Europe here for the reason of political compromise, for the idea of trying to do something which the different legacy industries and forces in Europe will then be able to say, okay, so we're cool, we're part of the mix, and so on. The science is clear. The International Energy Agency told us that. The leakage rates say that from a precautionary principle, we can't afford this anyway until we're absolutely certain that we're not increasing emissions rather than decreasing. The security factors are very clear. We need to be drastically reducing our reliance on gas. We have alternatives. We know that. Energy efficiency in Eastern Europe, improvements there alone could contribute a larger part of Europe's emissions reductions ambitions for 2030, and would create jobs at a time we need jobs in those areas, would soak up people and would stimulate the economy. We know we have other gaseous alternatives in the industries where we need to do them. Hydrogen can work in steel and in other industries. Energy is another matter, but it will need to be seen as a leapfrog to hydrogen, not a slow transition with blending gas. That's not ambitious enough and keeps stranded assets at play, gas assets. We have the solutions, is what I'm trying to say. Europe, let's score goals that we need to score. Let's not score goals at our own goal. Victor, over to you.
Thank you very much, Sean. Victor, if you're ready and unmuted, go ahead, please. Thank you.
Well, it's always hard to come after Sean and after Philippe's excellent comments this morning. So I'll just try and build on that and provide the investor perspective here. So I think, unlike what maybe Philippe had said as an introductory remark, there are parts of the financial industry that do welcome the taxonomy, and that from the onset saw the taxonomy as quite a useful tool. And I think here, if we take a step back and we look at what we were trying to do when we started this journey, and the way we see it is essentially set the objective. Yes, the taxonomy technical screening criteria per sector are ambitious, but that's exactly the point. It sets the objective of where all those sectors of the economy need to go by 2050 if we want to achieve the objectives of the Paris Climate Agreement. And so in that sense, it was a useful, it was in a way a useful way of setting a dot on the horizon, and then having all those sectors of the economy as well as investors figure out of how do we get to that dot on the horizon, how do we achieve that. And I think here from an investor perspective, as a first point to make very clearly, obviously sustainability is increasingly for a number of investors a key factor in the decisions whether to invest or not. But at the end of the day, in the short run for investors, it's still essential to invest and fund projects that achieve a financial return. That is going to be a factor that remains. It's a factor that's not going to change. And the taxonomy remains, silent about that. It sets the sustainability performance level. It doesn't, give you any answer about whether a particular project or company is in itself a good investment. So I think that's a very important point to stress. And I think from our perspective, what we've seen is, as Philippe very clearly articulated, it started off as a labeling scheme. It was essentially for the private investors, private capital markets, to be able, with a large degree of credibility, to say this is green and this is not green, or this is not yet green, but this is on the way to being green. If there's a proper plan in place, if you can explain to me how, as a company, your investment plans, your capital expenditures are aligned, and how you're going to get to the objectives that the taxonomy has set you. So in a way, a very good idea. And I think what we've seen over the last couple of years, particularly in the COVID pandemic, particularly around all sorts of macroeconomic stimuluses that needed to be launched by the public sectors in the EU with the Next Generation EU to support the economy, I think from our perspective, we've seen the taxonomy being incredibly politicized and incredibly politicized because it's started to be considered to be used in all sorts of other policy areas, maybe in policy areas where the taxonomy is not as a tool yet fully mature. We've seen discussions around the recovery and resilience facility, where there are some tangential references to the do no significant harm principle, but no no one-on-one copy of the taxonomy. We've seen discussions around state aid guidelines. We've seen discussions in the context of the ETS reform, and the list goes on. But what happened in our sense is that a lot of sectors of the economy, including gas and nuclear, started to realize, hang on a minute, for access to capital, and particularly public capital from the public purse, the taxonomy is going to be incredibly important, and therefore we need to make sure that what comes in the taxonomy fits our needs. And I think that's where we've seen, from an investor perspective, this taxonomy become overly politicized, and essentially a kind of basket to put in that basket a lot of other issues, be it around energy security, energy strategy, competitiveness, but where all sorts of other considerations are being taken on board, which were not part of the initial intent of the framework. I think from an investor's perspective, it's clear if you take those two sectors of gas and nuclear one by one. If you look at nuclear first, all my members are telling me, nobody is going to invest in nuclear power plants unless there's a very strong backing from the public purse. There's a very clear direction of travel from public sector. If you take the example of France, there's a very clear strategy to bet on nuclear for the next couple of decades. The French government did not wait for the inclusion of nuclear in the taxonomy to make those plans. Equally, other states have betted on gas as a technology, I think in our perspective wrongly, but that's their decision. They haven't waited for the gas to be included in the taxonomy. And I think that's where we need to be very clear. It was a tool initially planned for private investors to make sure that private investors are credible when marketing green products, and hopefully over time also make the right decisions based on the taxonomy. Nothing more, nothing less. And so, I completely join the comments by Philippe in saying, on the one hand, it doesn't prevent states from making their own choices in terms of future energy policy, but also it doesn't preclude private investors from funding activities in companies that are currently not aligned. So I think we've, as Eurus, have always disputed the argument that it is a very binary framework. It is, as I said, we've very much always seen it as this dot on the horizon, this objective setting, and then the starting point of crafting that journey together on how we get to net zero in 2050. So I think that's, and to conclude, I completely agree with what Sean said. It is a known goal. It is a known goal because if you look at the intent and structure of the legislation initially, it's very hard to explain why nuclear energy, because it around the do no significant harm principles, as well as gas, both the do no significant harm principles as well as the requirement not to lock in capital unnecessarily in the long term in those types of investments, how those two technologies fit the initial intent of the framework. I think we need to be realistic. If you look at all the scenarios, also the ones by the IEA often quoted, there is going to be a certain share of the energy mix worldwide coming from nuclear in 2050. There's probably going to be a small residual share of gas still in there. So I think those technologies are not going to be disappearing. The question is, if we set a framework that wants to send a signal, in our opinion, neither of those technologies should fit in the framework as it was designed. Now, obviously, we talked at length already this morning about the rationale for those inclusions, and I would call it the realpolitik considerations behind that. And we've always said, if the Commission is going to shoot this own goal, if the EU is going to shoot this own goal and include those technologies, the very least is that the rules should make it, for markets at least, transparent which financial portfolios, financial products have some gas or have some green nuclear in it. Now, luckily, the European Commission has recently mandated the European financial regulators, the European supervisory authorities, to amend the rules on transparency for financial products to make it very clear, a reporting field so that investors can see whether there's green gas and nuclear in their portfolio, which is something we welcome, but it's a small bandage on a big wound. So we still think it is a known goal because it's not necessary, and I think that's the final point to really stress what Sean said from practice we've seen. It is not because the taxonomy is going to tell you that gas and nuclear are green under certain circumstances that investors are necessarily going to fund that. A number of investors are very clear in saying, we still do not think those technologies are green or sustainable, and therefore we will refrain or we will not bet on those for the future. And I think that's where it shows to me the incredible missed opportunity that you had here when sustainable investors tells you, well, we've spent a lot of time and energy and resources building this framework together, but at the end of the day, we are not going to use it because we do not find it reliable. I think that's the proof there you have to say we have an opportunity that we missed here. I'll stop at that and happy to take any questions.
Thank you very much, Victor. And Sean and Philip, if you want to turn on your camera and join us, we can have a wider discussion. And I also want to let all the participants know that should you have questions you would like to ask to any of the speakers, please do raise them in the chat. We've touched upon this already, I think each and every one of you, and you, Victor, ended your presentation on that note, speaking about the response from the financial market participants themselves, and problematizing the fact that this will not be used. Could you all speak a bit more to that and what you believe the consequences of this will be? Will the taxonomy simply be a reporting exercise if this is to take place?
Well, let me dive in here, if I might. Just simply say the symbolism of inclusion in our headline taxonomy is really important. What we say to the world, what Europe above all says to the world about this, is actually really important to drive change in the parts of the world. It may not work. This is probably not going to work, but let's not forget that we're talking politics here. We're talking global politics. We're talking about setting precedents to drive an understanding across our planet because it's a planetary problem we face. Europe has a unique potential position, or a unique position in the past here, on leading change around the world. To suddenly throw it away because of a domestic political compromise is kind of like we have a higher duty, a greater duty to that. So just putting aside Victor's comments on the which I agree with on what's actually going to happen, we have an incredible duty at the moment, and the duty is to provide leadership to a world in turmoil that isn't moving fast enough. And we've got to remember that, because if we don't do that, it will come back and bite us in the bum. Climate change will affect people in Stockholm, in Paris, in Madrid, and in Bratislava. It won't just affect people in India. So we have to work globally on this. Anyway, so rant over.
And thanks for clarifying in the chat that I'm not from HSBC. In light of the news in the last couple of days, I want to make that very clear. No, but I think Lina, to your question. So I think there's two questions. There's one, the signal that it sends. I think, as we've all agreed, is the wrong one. Separately, there's another question, but I won't dwell too long on that, but is indeed how decision useful is the taxonomy. And I think there, I'll preach from my own parish here from the investor side. The fact is the data availability to operate the taxonomy properly and have reliable data to base your decisions on, we're not there yet. I think we have to be cognizant of that. There's still a lot of work to do to make the data sufficiently reliable for people to have the confidence to use that drive investment decisions. But I think we all knew from the beginning it is a multi-annual kind of work. It's a work in progress, and things will improve.
Philip, do you have anything you would like to add to that question?
Not really.
Then maybe we can move on to another one, which goes into also Sean's comments about the ripple effects. And we actually did an event together at COP in Glasgow on the international ripple effects of the taxonomy. And I just want to mention that that is also available online for anyone who wants to hear that very interesting conversation. But we have already seen now that there are concerns about the UK taxonomy, also including fossil gas. We know that there are many, as Sean also mentioned, countries looking to Europe to see what should they be prioritizing for the future. Would you want to speak a bit on the international ripple effects and what you see as this kind of, is this kind of a watershed moment for Europe to influence and kind of keep its climate credibility in its ongoing policies?
Well, I think it goes beyond climate credibility. Of course, climate credibility is awfully important, and indeed, Europe is claiming to be the global climate leader. And there, indeed, we need to match our words with actions. But beyond that, if you look at the wider geopolitical situation, what is the strength of the European Union? Well, it is its soft power to basically adopting legislation that becomes the world gold standard. We did that with the GDPR in the digital world. We are arguably doing that with again, in the same digital area with the Digital Services Act, the Digital Markets Act. And if we fail the test on taxonomy, we are basically relinquishing global regulatory leadership. And that is one of the few areas where Europe arguably has leadership. And I think it would be, well, more than an out goal. It would be really cutting one of our arms on the global scene to basically debase legislation as we would be doing if this delegated act is adopted. And indeed, then everyone will feel legitimate saying, well, if even Europe says gas and nuclear are good, who are we to say that they are not? So I do not expect positive outcomes from that. And again, that's what I would tell Emmanuel Macron if he were sitting in front of me. You are speaking about strategic autonomy. You are speaking about a sovereign Europe. Well, what are you doing when for domestic purposes you are, because basically your country invested in an industry that has become a huge stranded asset, then you are basically sapping the very objectives that you claim should be center and front of every EU policy.
And I think, Lina, if you look at the UK, it's interesting because our kind of the UK member of Eurosif sits on the group working on the taxonomy, and I think has publicly commented on the disappointment at the prospects of having gas in the UK taxonomy as well. But I think what I understand from the conversations there is you see exactly the same thing that happened with the EU taxonomy, which is in a geopolitical environment of uncertainty, where I think politicians are coming back to very short-term considerations on how to tackle inflation and ensure access to energy, that a lot of other considerations are then starting to permeate frameworks like the taxonomy, like we've seen in the EU, where it becomes this basket to settle all other policy issues that we have. And I think from an investor perspective, what is particularly interesting now is looking at, for example, I think you can't see the debate on taxonomy separate from, for example, the Repower EU communication, which was published this week, which is from an investor perspective going to be a very interesting test case, because essentially the message is we need to build a lot of LNG terminals to swap our gas consumption from Russia with other sources of gas. But as a long-term investor, you look at that and you say, well, okay, but you are asking me to put billions in those technologies, but if you are not changing your climate objectives, which you shouldn't, then those assets are by virtue nearly stranded by the time you're asked to put money in it. So how that equation is going to be solved and whether that's the right equation is going to be very interesting. But this is where we see those considerations at play in practice right now.
Thank you very much. Sean, do you also want to comment on this?
Look, on the international sphere, we've actually had quite a lot of success in the Europe leadership aspect. First, let me just say, we have a revolution sweeping the world at the moment around renewable energy. It is cheaper now than fossil fuels as a rule in countries of higher radiation. The reason why it's still not being dominating the scene is because there are legacy industries fighting for its change. We're pushing back on the transition because they're trying to maintain their now stranded assets. And we have the effective bankruptcy of state-owned energy companies in places like Indonesia and South Africa because they have relied on coal rather than made the transition. This change is happening. Now, why is that? This started with Germany in 2001. It is the feed-in tariff that was popularized in Europe in the early 2000s that led to the mass procurement of renewables, wind and solar, and drove down the price. And then that was picked up by China, our trading partner, who from 2006 started the largest program of procuring renewables in history and then drove volume production, offtake agreements generated by state action has what's driven this renewable energy revolution that the rest of the world, including the US, is now benefiting from. We've already shown leadership here. We kicked off a revolution, which is helping the world. We can do the same thing again. We are looking at this in the area of green hydrogen, and I don't mean blended hydrogen, where we've already had announcements in Sweden and in Spain, where ArcelorMittal has got a steel plant that will start operating later this year using green hydrogen. We are leapfrogging past gas straight to green hydrogen, not for energy. I'm talking about industrial applications where we really need it going forward. These are examples of European leadership. We can spread that technology and spread that knowledge around the world. We need to be aware that on the geopolitical stage, we have been a leader. We have helped broker deals, for example, with South Africa and the US, which was announced at COP, to achieve the transition of South Africa, despite Eskom's basket case state that depended on coal for the last 10 years, thanks to wrong government decisions. They are willing to make the transition and work with European leadership in this area. So all of these things are in place. And I'm just going to say that from a geopolitical stage, internationally, the coup de grace was last September in a country that we are now having a very difficult relationship with. The Duma passed a taxonomy of green finance, which was modeled on the European taxonomy, used the same language in the European taxonomy. The reformers in Russia pushed that through. It excludes unabated gas. It's still in place as law in Russia. So what in the world are we doing now in Europe to consider weakening our own taxonomy, weaker than what the Russians have publicly passed in the parliament, weaker than what the Chinese have in their taxonomy, because we want to try and have a bit of a political compromise between member states in domestic politics in Europe? It's kind of like, that's what I mean by their own goal. We have actually been a leader. I mean, of course, Philippe would agree and Victor would agree, we haven't done enough. No country in the world has done enough. No region, no economic bloc in the world has done enough over the last 30 years. But we have done a lot in Europe. And I'm going to say that I hope we will continue to lead in this, because really the lesson of the war in Ukraine has been by failing to act domestically adequately in the last 30 years, we have allowed ourselves to drift into a disastrous geopolitical situation, utterly disastrous. I mean, think about the poor energy regulators in Poland and Bulgaria, and of course in Finland now, dealing with the arbitrary cutoff of Russian gas early. Well, you know, this is the world we have created by not acting ambitiously enough. And I'm going to tell you, the energy security issue of this is playing out very strongly in other countries. In India, where they import their gas to create fertilizer for farmers, subsidized by the government, they are now building or commissioning vast renewable fueled green hydrogen plants to try and reduce the risk of price volatility going forward around natural gas imports, because they are freaked by what's going on. And this is happening around the world. Even China is now worried about the imports of fossil fuels through the Straits of Malacca and so on, from a pricing, from an energy security, and from a climate change aspects. And of course, we are too. So it's kind of one of these things, isn't it? Right? You've got a clear direction. Everyone's pulling in the same direction, and then suddenly your left hand reaches out and starts grasping at gas again for reasons that you don't seem to be able to control it. And it's just this weird thing going on in Europe at the moment. I'm going to say to all our MEP colleagues, let's stick with the program of change. We have the opportunity. We have the funding, the money ready to move on this area. We're just simply kicking an own goal for reasons that we will look back afterwards as the goal goes in and think, my God, what happened there? So, but anyway, internationally, the opportunity to continue and grow European leadership is absolutely right in front of us. This just undercuts it.
Thank you very much. I wanted to touch upon one of the issues that have been mentioned about the kind of inherent, it seems, misunderstanding of the taxonomy, what it is and what function it is to play. And I wanted to ask, maybe it's a bit on the nose, but wanted to ask, is it a misunderstanding or is it a misconstruction? Is there someone here who benefits from making this overly complicated? It is a classification tool. It is not supposed to divert investments. It provides information. Why is there an inherent misunderstanding of what the taxonomy is?
I might take a go at it if you want. Well, I think maybe it's also, so the EU started off the Sustainable Finance Action Plan with this very clear idea of we need to reorient capital flows to the right places, which I think was the message. Now, the taxonomy helps in setting the kind of the objective and setting the sectors that need extra funding. But as I said, from an investor perspective, unless it generates good investment opportunities, or at least with an adequate return, private capital is not going to flow as much as you think it is to that place because there's a taxonomy. So in that sense, it sets the tool, but the taxonomy in itself is not enough to reorient capital flows, because you need also to do something about the overall returns and risks of the sectors, which are parameters that investors are still going to have a look at in 2030, 2040. This is going to stay. I think we have to be realistic about that. And I think that's where, for me, there was a little bit of misunderstanding and a lot of companies suddenly thinking my bank or my investors are going to tell me, if you're not taxonomy aligned, you don't get capital anymore. I think this has been proven wrong. There's clearly, it's not the case. Now, however, as Sean said, and I think we've got a lot of evidence for that, if you have good projects and you can issue credible green bonds, I think there's a high demand. And I think that comes back to the main problem that we see, is there's a lot of studies showing us exactly where we need to go, what kinds of investments we need to do. And, in 2020, McKinsey did a very good report on that across what was the investment need across Europe. The fact is, unfortunately, a lot of those projects that we know we need and re-engineering of certain sectors of the economy don't have a investable business case yet. It's a mix of the fiscal incentives, the economic incentives, the overall policy framework, and that needs to change. But once we couple the taxonomy with those kinds of changes, then there's a lot of money out there wanting to invest in green, but it's not money that's going to invest in something that is not profitable. And I think that's where we need to get that equation right. Because if you look at Repower EU again, and the accelerated rollout of renewables, as it quite rightly says, it's, there's questions of permitting for renewables, there's question of land access, and there's unfortunately a question in geopolitical environment of the costs of the minerals that are very, used in solar panels and in wind turbines. But for certain sectors, access to finance is not the bottleneck. It's not access to finance. The bottlenecks are elsewhere, and we need to solve those bottlenecks.
I would agree with this, but I would add that the problem that we may have is not just that the investment that we need do not have a good enough a business case. It's also that the fossil investments have an artificially good business case. In other terms, as long as you can well, basically dump the externalities on the society at large or on the taxpayer, of course, the returns look good. But once you have to own the damages that you are causing, then, of course, the business case for fossil investments becomes very different. And then by comparison, the returns of a sustainable investment becomes better because, well, my perception is that actually, if you look at the whole fossil revolution, because again, fossils are a concentrate of energy that you can find almost nowhere except in nuclear. So they are such a boon that they have made returns so extraordinary that they are taken for granted. But actually, the returns, the kind of returns that we've seen for investors the last 30, 40 years are actually unnatural. But they, of course, have created the expectation that you can have that without destroying the planet. Actually, you can't. So I also think that the financial industry will need to learn to live with much lower returns. I mean, positive returns still, but not of the order of magnitude that we've seen when we were basically pressing a lemon called planet Earth without ever thinking whether this planet would remain inhabitable for human beings.
Thank you very much. Sean, would you like to comment?
Well, what I want to draw attention to is the security aspects now. Having ranted a little bit about the environmental aspects, we are confronting a dangerous security dependency right now, and that applies everywhere. In some ways, Ukraine will have to rebuild itself with the opportunity of getting rid of the district heating based on gas and shifting to electric infrastructure, which is something Europe actually has to do as well, but isn't doing. We haven't, the Russians are demolishing in the Ukraine, so they've got a vast, horrible rebuilding job to do. But we need to do it with our existing infrastructure. We need to get off the infrastructure that we're currently tied to, which is helping us with be terribly exposed to geopolitical winds. Switching gas is not going to work too well. I mean, what we're currently looking at is switching dependency from Russia to Qatar, not exactly a conflict-free zone, folks, or to the US. We've got Donald Trump running for election in 2 years' time. I wouldn't call that a secure supply in the current circumstances. So while there will be a necessity, just putting aside the climate considerations, to keep using gas for some time to sweat the assets, to do some imports, the more urgent task is a drastic shift away from gas, and with all the methane leakage and the climate and so on. And the thing is, there's a way we can do this. I mean, just take Germany, for example, where the current German government is committed to improving the backbone grid connections. But we've been talking about these backbone grid connections that can take excess renewable energy in the north to the south, which are relying on fossil fuels for 10 years now. They've been stuck. They've been stuck in various planning issues and solving the problem of how you build a grid across Europe, etc. We've been messing around. And this applies in many Eastern European countries too, where the nature of connections of renewables, where Poland, for example, has enormous wind potential, has been delayed by, I'm going to call it bureaucratic snafus and sometimes legacy interests, making it much harder to build new energy. Across Europe, we have this opportunity to be able to drastically scale up renewables, to be able to drastically reduce demand for energy in places where fossil fuels are big, which is especially Eastern Europe, where if you look at the International Energy Agency reports about this, the potential to reduce energy use in Eastern Europe is extraordinary, noting that this pays for itself because the return on investment is 2 years, 3 years, maximum 5 years. Do this. It's an extraordinary opportunity, and it creates jobs. It creates jobs at a time we are flooded with refugees, where some of those will be looking for work. And what's more, we've already had a problem of jobs in the region. And you're sort of thinking of this, and you're thinking, why is it that we're talking gas? Why is it that we're talking gas? So I'm going to say this isn't a matter of what we must do. This is a matter of what's going to make economic sense as well as energy security sense. I don't want our gas supply to be more dependent on the Middle East at this stage, given what we now know about the geopolitical volatility of the climate era we're in. But we'll have to do it in the short term, but we need to be rapidly increasing. Now, Repower EU is good and it's overarching. It's just that we've got these odd flaws, like let's support gas plants over here. We should be killing, as the International Energy Agency says, we should be killing any new fossil fuel infrastructure. None of it can be seen as consistent. Now, I'm going to keep out the 2 LNG plants in Germany for the moment, which are essentially feeding existing infrastructure. I'm talking about gas-fired energy plants, and I'm talking about extraction. They're the two things that we need to be killing. Distribution is slightly more complicated. And we need to be making sure that we focus on getting demand down, not just energy efficiency, but also interconnectors between countries. Well, we've been slow. We've been trying to widen interconnector between Spain and France for 10 years. It's been blocked. It's mad. We'll be able to get some of that excess renewable energy from Spain feeding into the broader European grid. And you look all around Europe, and there are these challenges. And you know what? We've got the capital. The capital will move. Interest rates are low. We create these inventions. I can tell you, investors will move into these things because they are future fit, because they are consistent with the world that everyone knows, including mums and dads in Italy, that it will be clean and green. It's just a matter of how quickly we can get there. And I'm just saying we can actually get there remarkably fast without these crazy diversions that we're getting ourselves in for and getting caught up in and wasting political capital and wasting oxygen when we need to be spending our effort and time on going forward super fast to get off these crazy roller coaster we're still sitting on. So, it's opportunity, everyone. And, it's opportunity that will create jobs as well as reinforce Europe's geopolitical global position. And as well as, by the way, create export opportunities, because there is no doubt anywhere in the world that I speak to now, thanks to the commitments in the last 2 years, the world is going clean and green, like the family in Italy would understands. That applies in Japan, that applies in ASEAN, that applies everywhere. It's just a matter of how we do there. And if we want to create export industries in Europe, which of course we want to build, grow, enhance, enlarge, we need to be looking at those export industries that will be money makers in the future as the world shifts to clean and green. Not those export industries, not those industries that are trapped in the 20th century. That's the fossil fuel industry.
Thank you. We will soon be moving on to final remarks. So I want to make sure that if there's anyone from the audience who have any questions, please do fill them in. But before we move on to final remarks, where I will allow the speakers to touch on any aspects maybe they don't think that these questions have covered, I wanted to also come back to Repower EU, because we do see that this is we have a set of ambitions which are very clearly not in line with this Taxonomy CDA. One of the things that is being currently discussed is, the Taxonomy CDA really setting renewable and low carbon solutions and technologies at the competitive disadvantage position on sustainable finance as it comes to private markets. Now, when we've already discussed that a lot of investors will see through this, they will not be using the taxonomy. But isn't there also a significant risk here that this will either lead, of course, to significant delays, or at least lead to some kind of uncertainties that will, again, delay the shift of capital at the speed at which we need it to happen?
I think if I may have a first go at that, I think it comes back to actually what Philippe said earlier, which is we have a lot of other economic tools that are artificially bolstering the case for fossil fuels now. We have a lot of hidden subsidies and support for fossil fuels, and of course we had also for renewables, but we've seen, for example, onshore wind 10 years ago needed a lot of subsidies to make a business case, but nowadays it's virtually subsidy free and you can actually commercially run that without any kind of major support. So the economics of those technologies are shifting. So I think that's also the case, is that the new technologies, their costs will drop, but I think we shouldn't lose sight of the fact that there's a lot of our or economic tools that are artificially distorting things in favor of fossil fuels. And that is something we need to address. And it's the same with if you look at the emissions trading system in Europe, the ETS, which is supposed to send a price signal, a carbon price to different industries and investors about the direction of travel. Of course, when the ETS price is high, it is perceived as penalizing historical fossil-based industry. I think a lot of the times what people miss out is that a high ETS price bolsters the business case for other technologies that can be switched to. And at some point, the hope is that people will say, well, I'm fed up with paying those high ETS prices for my emissions of CO2. I will switch to a low carbon technology to shift that. So I think I think again, I don't have the impression, but maybe I'm wrong, but I don't have the impression that the problem is the access to capital necessarily, but it's actually that the incentives and frameworks sometimes to make the business case for those projects are not the right ones, and we need to really start changing those.
Philippe or Sean, would you like to jump in?
Totally agree with that. Totally agree with that.
Great.
Well, we're in furious agreement on this particular panel. I'm going to say good luck, Philippe, because at the moment this particular issue, in a way, it's a trivial thing, right? This CDA, it's like something come out of the 19th century, not the 20th century. That you do get in politics sometimes. Its impact is likely to be modest, frankly, but its symbolism is absolutely terrible. And we know that in politics, symbolism counts. I mean, that's something we've learned in democratic politics. Well, we've learned in autocratic politics too. And we need to get our symbolism right. So, folks, yes, there are going to be a lot of investments. The Commission's right. They're saying, oh, not much, not what's going to happen here. Let us get it through. And I'm saying we cannot afford a message to the world, let alone to our own citizens, that gas is somehow good. Because it's very clear from the science it isn't, and every science report that comes out repeats it. That's, the IPCC, the IEA, et cetera, that it's not part of the future. It needs to go. And, nuclear is a rather dangerous and difficult solution for us too. It might be low carbon. It is low carbon, but the risks involved, not to mention the risks we're seeing as Russians fiddle around nuclear plants in Ukraine, and the terror of Chernobyl haunts us at all times. Folks, we need to be thinking now about setting the right messages. We need to be thinking as grown up, if you like, as grown-ups about how we tackle the future. So I'm going to say, Philippe, good luck. You're doing a fantastic job. Your colleagues and MEPs are doing a fantastic job. I hope to hell that those colleagues that are still feeling the heat from their political masters back in the member states realize that there's something important for us to do here, which is to send a message to the world. They tried to push us to say gas was good, and we said no. We said no, the future is what counts. That's what I hope comes through. Best of luck.
Thank you.
With that, I think we can move on to final remarks. We have about 19 minutes left. So I think it's up to each and every one of you how long you would like to speak. But I think we can begin with Philippe, since as we just heard, you were given good luck. So I think it would be good for us to hear a bit more about what you expect. Are there any aspects here who have not been covered? And of course, is there any action you encourage from the participants here today?
Well, the first thing I'd like to say is indeed qualify a bit the remarks I made about the attitude of the financial industry, because actually the financial industry is, as any industry, a mixed bag. You have all sorts of players there. The problem I often have with representatives of the industry is that usually those who claim to speak for the industry are actually aligning with the lowest common denominator, or basically with those who stand to lose from any transition. And we need the parts of the financial industry that is really future-oriented to speak up much more loudly. At the risk, of course, of breaking the front of the industry. And that is something that I've witnessed already time and over again a reluctance to break ranks from corporate leaders with one another, even though some are really future-oriented and some others are not so. And I would even say, well, I'd like the entrepreneurs to speak up against the rent seekers, because those who resist change are the rent seekers. And in a spirit, again, of free enterprise, I line up with the entrepreneurs and they can see the opportunities and the needs that the future offers, and well, they are going for the long run, and these people need to speak up, especially now that decision looms. Now, I see the decision in the European Parliament on a knife's edge. Much will depend from the attitude of the Conservatives, the EPP, and especially the German EPP. They have been very vocal initially. Now they have to stand up because, of course, they have influence in their own political group. And a lot will depend on them. And I saw a question from Anna Maria, what happens next if we fail in the European Parliament? Well, then the next step is that at least two European governments, those of Luxembourg and of Austria, where the Greens are present, will go to court. And basically, they will try to have a decision by the court that declares the CDA illegal because of all the irregularities, not just in terms of process, because the consultation has been missing, etc., but also, and more importantly, on substance. So we want the court to strike down the CDA, but of course, this takes time. And the damage will have been made. Because indeed, you create a CDA that basically debases the legislation, and it creates a powerful symbol that indeed Europe is not matching its discourse with real acts, and that, well, to some extent, the damage will have been made until hopefully the court repairs it. But that's going to be a few years down the road. But you can expect that at least the Greens will not let up on this. We are going to fight the battle tooth and nail until the end. What really makes me sad is that even the president of the Commission realizes what is at stake. But then again, realpolitik, precious power plays at European level makes that she doesn't have an entirely free hand.
Thank you very much. Powerful statements, and I think we are all going to work towards trying to ensure this veto together with you. Victor, would you like to go next?
Sure. No, I think we've said already a lot, so I don't think there's much I can add. Just to say again, we think it will be a missed opportunity if this CDA gets accepted. I think also, if it does pass and the legal challenges emerge, I think what the proponents of the CDA may be disappointed by is that they won't necessarily translate a lot more financing to those sectors as they might have expected. As I think the financial institutions will think very, very carefully about financial products or supporting bonds that finance green gas if there's a legal challenge in court at the same time, because it carries significant reputational risk as well. So I think what I've sensed as well is this idea is that we get this CDA through, and then it's done and dusted, and the debate is settled, and we don't need to talk about it further. This debate is going to pop up in different parts of EU policies again and again and again. So it's not. I think you're not really serious if you're thinking that this will settle the issue. And I think next big thing obviously is going to be the question at some point whether we need to revise the Stability and Growth Pact for the EU and the budgetary expenditure of member states. Even if the CDA says nuclear is green. If certain countries arrive at the negotiation table in Brussels saying, can you please exclude all our expenditure on certain technologies from the deficit and growth rules, I think some other countries will have something to say about that. So I think this seems to be this idea of you settle the debate now and it's done. I don't think it's done. I think it will come back again and again and again in a different constellation, a different policy file, and a different framework. So that's that. And I think for me, what's I'm not an engineer, but what I've understood and what's actually astonishing about the CDA is, if you think about it, even if you're a proponent of gas, the geopolitical situation has completely changed since February. And actually, if you look at the content of the CDA, I've been given to understand by gas expert, a lot of the content is based on the premises that we would have cheap Russian gas via the pipelines. Actually, those provisions are now not as useful as they would have been to the proponents of gas, because the situation has completely changed. And so the question is now, are we going to let a legislation pass through that doesn't even serve the purposes of the people that wanted it very well? It seems to be a completely outdated legislation on that bit compared to the situation we had a couple of months ago. So I think that's where it starts to be even more incredible in a way. So we hope it won't pass, and we hope that we'll see a satisfactory outcome there.
Thank you very much, Sean. Your final remarks.
Philippe, as far as I remember, the vote's unlikely to be the final vote to early July, if I'm right. Is that your understanding?
Yeah.
So we have, and this is something important for our listeners to note, we've still got a window to educate those MEPs who are not across this issue yet, which is, I think, a bit more than half of the nature of the problem we face. So think about getting your own organisation institutions to lobby, to communicate, to share, to back up Philippe's comments between now and early July. There's still a chance to stop this foolish, this crazy, this lunatic, this own goal activity that we're indulging in Europe at the moment. I would just say, in terms of final messages, look, it's a 50% cut that we've got to achieve, 55% really by 2030. That's Europe's commitment. That's not even, I mean, I would actually say the scientists would say Europe needs to get a more ambitious emissions cuts, because we've got a bigger duty compared to the rest of the world. But let's stick with the ambition for a while. You can't make the sums work with new gas. It just doesn't work. I mean, the boffins at the International Energy Agency have made that very clear to us. So anything which allows new fossil gas energy generation is inconsistent with our goals, unless we can somehow ever find a whole lot of way to get carbon out of the atmosphere, balance out the equation. And direct air capture is not that advanced yet, unfortunately. As much as I hope it'll work in the 2030s, it's not an easy solution. And anyway, we need to do that anyway. Why would we just put more pollution in the atmosphere when we're trying to get it out? It's kind of like, trying to empty the bath and adding more water into the top. That's really what this CDA is all about. The second point to note is that we've been sold a false story around gas for the last 30 years. The marketing around gas from the gas industry, I'm sorry to have to say, has been around it being a transition fuel. It isn't, because the leakage factors, because all of that work has excluded the fact that when you look at the emissions profile of gas, transition compared to coal, you can't just take the plant. You have to take the fact that gas is being piped over thousands of kilometres, being shipped and put in ships, because if you're not counting that, you're not getting a true picture. And the National Standards Association organisation has put out criteria. Lots of people have put out criteria. We discovered, thanks to satellite coverage, by the way, hallelujah, in the last 5 years, that our numbers have been wrong. And we've been sold a false story, because, by the way, there's been quite a lot of knowledge about this for some time. It's just that we now know publicly, each of us can get access to the information on the internet, that the leakage factors from gas are just out of this world, just out of this world. 80 times the potency of CO2, it's very hard to manage that system. It is not a transition fuel, unfortunately. I've been said on air publicly, keep the coal plants going in Poland. Don't switch the gas, because we're locking in long-term assets that are going to be just as polluting. Whereas everyone knows coal's going to go, and we'll get rid of it in the next 5 or 6 or 8 years. That's, the idea of shifting to a whole new set of infrastructure that doesn't save us emissions is a form of lunacy, now that we know this information, not a transition fuel. We have to leapfrog. We kind of all know that in our heart. And our scientists know it too. We don't have the time to make incremental change, to keep tinkering around the edges of the system that we currently have. And let's face it, the war in Ukraine drives that home for us. We need drastic changes, ambitious changes, commensurate with what the scientists are telling us we have to do to address climate change. It's a time for leapfrogs past fossil fuels. It's not a time to try and tinker with and slowly improve fossil fuels. Big changes required, like buying electric vehicle, abandoning diesel fleets and hybrid fleets, which is what we're doing in Europe at the moment in energy. That's the kind of, we have a better path open for us. We do have an extraordinary energy efficiency pathway available to us. We do have, which is capacity, which is skills, which is labor. We do have a renewable energy pathway for us. We do have a grids and interconnection. We've got a quadruple electrification in Europe over the next 30 years. We know we can do it. It's engineering and capital. That's all it is. We have the skills. We just need to get the permits. We need to get the bureaucracy out of the way. This is one area where cutting red tape is going to be really critically important. And we have some alternatives in critical industries like green hydrogen for steel or for chemicals or whatever. We can do that. And actually, we're seeing the projects appearing this year at an incredibly affordable price. We've got to get on with it instead of sticking to this gradualism, which is implied by the CDA, which gives the gas industry longer life. There is no future for this fuel that we now know has been killing us or is in the process of killing the planet. We have to get off it and we have to leapfrog out of it, and we can. So, folks, the CDA, crazy symbolism. It's time to stop it.
Thank you very much. With that, we are about 5 minutes out from our planned ending time, which I find very impressive. So thank you all to the speakers for not going past the allocated time. I think we've covered a range of issues, a lot of important issues, and I'm very grateful that you could all join us this morning. Also, that goes to the participants. And we will be making this available publicly so that you can share it with any members of parliament who might need some more educating, as someone here has nicely put it. I will not take your time for longer than necessary. I want to thank, of course, again, Climate Bonds Initiative and Anna Maria and Sean for co-organizing this. I want to thank very much Victor van Horn for joining on very short notice from Eurosif. And also, again, Philip Lambert, thank you very much. Then also a big thank you to Bellona, Europa, Hannah, Rebecca, and Aurelia, who are sitting and live tweeting and trying to make sure everything runs smoothly technically. So with that, I hope you all have a great rest of the day, and I look forward to seeing you at our next event. So stay tuned to learn when that is. Have a nice day, everyone. Bye-bye.
Thank you. Bye.
Thank you. Bye-bye.
Thank you. Bye.